Attention startup leaders. Are you strapped for time but hungry for strategic insights? Introducing Managed Chaos, your go-to podcast for navigating the startup world in less time than your morning commute. Join us as we share expert advice, real-world examples, and actionable strategies to help you scale your business, allocate resources effectively, and achieve visionary results. Tune into Managed Chaos and join a community of like-minded innovators on the path to entrepreneurial success.
Building a strong business means understanding which type of growth you want to achieve. Long-term growth or short-term growth? Which is better for you? Which has a stronger return on your investment? Welcome to Managed Chaos Podcast, where we give you the startup business rundown in less time than it takes for you to get to work. I'm Katrina Purcell.
And I'm Rachel Anderson.
And today we're talking about long-term versus short-term growth. All right, Rachel, I'm really excited to dive into this topic. So let's start with the fundamental basics. Tell me, in general, what's the difference between long-term and short-term growth?
So we're really talking here about strategy. Do you want to focus on growth over a long-term period of time versus a short-term period of time? And within those two choices, there are different tactics that you can take that allow you to focus on revenue, return of investment, building followers, profiles, customers, things like that within those long-term and short-term views. Now, there is one caveat of long-term and short-term growth is somewhat subjective. So it really just depends on what you're viewing it as for your goals, for the life of your company, how far you're really stretching. I would say in general, you're looking at about 6 months for short-term growth and a year and longer for long-term growth. Again, that's not a perfect science, but I would say that's a good kind of gut check of what that could look like.
We had a professor in business school who talked to us about how management teams, especially at public companies, tend to only focus on their quarterly earnings reports or, quarterly metrics because that's how the street is evaluating you. And they really lose sight of that longer term growth. And that's why you sometimes see companies stop innovating, stop having, those exciting new products when they're a public company because they focus more on those quarterly short-term numbers. So it's a really great point. Let's break it down a little bit more and let's get some good examples of what long-term growth kind of really means.
Yeah, that's great. So long-term growth can look like several different things, but I think generally we'll probably bucket them into 3 categories. You're talking about customers, you're talking about product, and you're talking about partnerships. So when you break it down, you're looking at long-term growth in how do you build a strong brand and customer loyalty. So you really want to know, how do I invest in my brand identity, my customer experience, and even the relationships that I have with those customers. Sometimes that looks like having whole customer programs. Right now, they're called customer advocacy programs usually. And there's someone or a team of people that are focused within your business on having that relationship with your customers, getting feedback, making sure there's a two-way communication loop, things like that. Making sure that you really have them as the forefront of value. And the reason that that's so important is because keeping a customer has way less cost than getting a new one. And so it's really important for long-term growth to keep those customers, which is sort of its own compounding interest. More customers on more customers on more customers with losing as few of them as possible. The next one is really product. And you kind of touched on it by talking about those short quarterly sprints and really focusing on that once you go public versus long-term view of what growth looks like. And that's all about innovation and research and development. You really want to allocate resources to the research, to the development, to the innovation of your product or your service or your kind of product roadmap, your offerings, because you want to stay competitive. I think a really good example right now of that is AI. AI is inevitably going to touch every part of business, of industry, of growth. And so customers that are making the investment right now to even just ask the question of, where does AI fit into what I currently do? And how do I find a way towards that for the future is a perfect example of having a long-term growth mindset and really making a strategy for that. And then the final one to really think about is strategic partnerships and alliances. And you really want to form partnerships that enhance all of your capabilities. Maybe it's market research or technology access. I worked with one company at one point who serviced a very specific kind of tech provider, and they partnered with other companies who did training resources for those tech providers. So their business model was not, the same, and they didn't offer the same thing, but their customers were the same. So they were able to have this sort of symbiotic relationship between them, where they really were able to partner well together and send each other business and services and customers, because they had formed a really strong and strategic partnership. And so making sure your goals are really aligned was a key part of that.
I really like that. It's also comes back to something we've talked a lot about, which is that goal alignment, and really being able to understand what your goals are, being able to communicate them, and then being able to make choices that are in alignment with them, which I actually find to be one of the more difficult challenges that teams face, because a lot of times you can say the same goal to everyone, but they all hear it differently in relation to how their department would react to it.
Yeah. Then, I talk to people all the time, and I use the same exact analogy, and I'm going to say it here, and I'll probably say it 1,000 times on this podcast. But when I say, hey, think of the color blue, everyone's going to have a different color. Is it sky blue? Is it royal blue? Is it navy blue? Is it baby blue? Is it a blue of a particular sports team? Is it the blue of a shirt you love, of a building you go to, right? Everyone's version of blue will be extremely different, but everyone's correct, because it's all blue. But it's really important to define and make sure that you mean the same thing of what you're saying. So I completely agree with you.
So let's talk a little bit more about different short-term strategies that folks could use for growth.
Sure. So for short-term strategies, I'm going to break it down into 3 as well, so that hopefully these are really consumable for people who are listening. But there are a lot of different short-term strategies that you can do to boost. And those strategies are very tailored to industry, as well as customer, and what your actual product offerings are. So if you're listening and you're thinking, okay, I really need a boost of revenue right now, or I need a boost of customer impact or influence or followers, or whatever that thing is for what your goal is, there's probably a dozen different things. But from a really high level, I think that we could break it down with first being really aggressive market campaigns. So we do this a lot in marketing, where we'll put together a highly specialized campaign. And when I say campaign, sometimes that is Google ads or social media ads, or maybe it's a LinkedIn strategy, or some other sort of quick, consumable, easily accessible reach of a campaign. And really, you want to launch these targeted campaigns to drive immediate sales and visibility. So in this short-term strategy, there's only really 2 potential outcomes, and that's money in the bank through a sale and visibility. Another one of these strategies would be really optimizing your operations for efficiency. So people sometimes don't think about this, but if you're getting paid $100 an hour, hypothetically, and you find a way to save that hour of work down to half an hour, the company has now saved $50, because that $50 of your time can be put into something else that makes money. So when you look at that from a larger business organizational scale, you're thinking, how can I streamline my processes to really reduce the costs and improve productivity for my employees, for my products, for my customer, for deliverables, whatever that looks like. And then finally, we want to really capitalize on current trends or opportunities. And that could be seasonality. Like right now, I'm kind of time stamping this episode, but we're in the summer, so hurricane season is here. Is there something that you can talk about as it relates to preparedness, or outages, or whatever that looks like? Or maybe there's a big trend coming on social media that you can be part of, and you want to capitalize on that opportunity so that your customers have an immediate reference for something that's time stamped. And so you really want to adapt to these market trends and capitalize on these opportunities so that you can do some of that short-term growth. And I think of them as like little hops up, right? Rather than this long, smooth trajectory. Short-term growth is about seizing these small little opportunities.
And I think you can really put together a lot of these short-term growth opportunities into a longer-term strategy. It's just that initially they start out short-term, and you're probably going to see results from them much faster to be able to know if they're working and then being able to pivot. Whereas the long-term growth might take longer to know that you're on the right path and that you're kind of going in the direction that you want to be going in. Is kind of how I think about it in my brain in terms of, am I going to see results quickly, or do I need to wait and have patience for those results, which, as we all know, is not one of my strong suits.
Yeah, no, but that's the point. Like, I think the difference between short-term growth opportunities and using short-term growth opportunities to be long-term growth is that overarching purpose. Am I creating a long-term plan that's full of short-term opportunities?
Mm-hmm.
And that's still long-term growth. You're thinking about it over a long trajectory. You're just using smaller milestones to bump you, but you do still need some of the heft of longer-term growth strategies and tactics to make sure that those short ones are really seamless within the larger plan. So you're absolutely correct. And I'm glad you called that out, because that is important to remember and know.
Yeah, because once you acquire those customers from your short-term strategy, you then need to hold on to them through your longer-term customer, happiness and retention strategies.
Yeah.
So if I'm a company, and we've probably already started going into the answer to this question, but if I'm a company, how would I choose? And I'm guessing the answer is you don't choose. We need to kind of put them both together, but let's dig into that.
Yeah. You're right. We did kind of veer into this, and that's okay, because you're really correct when you talked earlier about goals. It's all about goals. If I could choose one thing for startup leaders to really just like, I'm going to do this well, it's being able to communicate the goal and the vision and where you're going, and making sure your entire organization can do the same. So choosing your strategy should start with understanding the outcome of that goal. Short term is great for a big boost like campaigns and product launches, but there's also drawbacks. There's risks associated with short-term or short-lived trends. That could be a lot of time and effort put into something that has a very short lifespan. There's risk of overlooking long-term opportunities when you look and go after those short-term gains. There's also potential for high costs when you aren't 100% sure if that return of your investment is going to be worth it. And similarly, long-term is vital for health and even for your exit options. So I know as a startup founder, you're not always thinking immediately about how do I get out of this business? That's usually not what you think about, but investors do. They're looking for an exit as they invest. Are you going to merge? Are you going to acquire? Are you going to sell? Are you going to go public? And so these long-term strategies have to, or your long-term strategy has to be predictable, and it has to be profitable. But profitability in this sense can also just be like positive outcomes, like growth of your employee profiles. And so there's some drawbacks for long-term strategies too. You might have to have a lot of sustained effort over a long period of time, and you may not have the resources yet to do that. Or maybe you are trying to balance short-term financial constraints while going after these long-term goals like innovation. How do you do that? Or ensuring that you have goals that are aligned across the organization, as well as managing your expectations of those long-term goals. Because I cannot tell you how many times I have seen leaders say, yes, we're going to invest in this long-term thing, and then immediately go back once they realize they're not going to hit their quarterly goal. But those are two different strategies, and you can't answer one with the other, but all these things kind of play in together, right? So really, both are great and both are needed and both are valuable as long as you understand your goal outcome. And you really want to do a healthy mix of both to really amp up and aim for whatever your business objective is.
Yeah, I want to just reiterate something you said there. It's that there are times the management team could set long-term strategic goals, and then when they realize they're not going to hit quarterly targets, completely shift that long-term plan. And it can be really frustrating for the team on the ground because they're marching towards this longer-term vision, and now they're being told, no, pivot because of quarterly earnings or quarterly, numbers didn't come where we wanted them to be. When sometimes there needs to be a little bit more sustained investment to actually start to see that return. And I think understanding as a leader how to work through your own trepidation around, where the numbers are and where you want them to be and how to stick to that is important. The other thing that's really important, and we've already talked about it a little bit, I'm just going to reiterate it again because I've seen it be an issue for founders, is the communication of that vision. Because oftentimes, I had a founder say to me, I don't understand. I've said it 100 times. I've said it in town halls. I've said it in senior leadership meetings. I've said it so many times. How do they still not get it? And I said, well, but you keep saying it the same way. You're not coming to them where they're at, right? You're not visualizing it. You're not having someone else say it. You're not, you can't just keep reiterating the same words to people and think that at some point they're going to understand them. You have to keep coming at them with the messaging, with the vision, but you have to do it in multiple ways so that people have a chance to kind of digest it and take it into themselves, sort of like your blue example, right? Where you could lead them to a path of a color blue based off of how you start to talk about the question and how you're kind of preceding their thoughts. And so it's so important as a founder to be able to understand whether or not people are actually grasping what you're saying.
Yeah, absolutely. I mean, that, like I said, is probably one of the most important things that they really need to walk away from, is that, yes, the pivoting can be incredibly frustrating for the people that are actually trying to do the work. It's incredibly misleading for your customers if it filters down to them, which it usually does. They usually can feel it or sense it. It can be confusing for your investors, your board. So really making sure that that is one of your top skills as a leader will help immensely as you figure out your short-term and long-term goals.
So we may have just come up with a whole nother topic for a podcast, but today we really dove into short and long-term growth. And we are so excited for you to listen to this podcast everywhere that you stream your podcasts, including Spotify, YouTube, and Apple Podcasts. And we look forward to seeing you again next week.
This was another informative episode of Managed Chaos, the podcast for startups. You can find us on all of your favorite podcasting apps, as well as on Instagram and YouTube, where we are at Managed Chaos Podcast. For additional resources or to continue the conversation, you can find Katrina Purcell and Rachel Anderson on LinkedIn.